On-chain data shows the Bitcoin exchange whale ratio has spiked up recently, a signal that shows dumping may be going on in the market. As pointed out by an analyst in a CryptoQuant post, the BTC exchange whale ratio has risen to very high values recently. The exchange whale ratio is an indicator that measures the ratio between the sum of the top 10 transactions to exchanges and the total amount of Bitcoin moving into exchanges. In simpler terms, this metric tells us what part of the total exchange inflows the 10 largest transactions make up for. Usually, these large transactions belong to the whales. So if the value of the indicator becomes high, we can tell that whales are sending large amounts to exchanges as they now make up for a bigger part of the total inflows. Such a trend can prove to be bearish for the price of Bitcoin, as it may show that whale dumping is going on currently. On the other hand, if the ratio goes down, it means a healthier balance is returning the market as whales control a lesser part of the exchange transactions. Related reading: JPMorgan puts Bitcoin at $150,000 in the long term, but what about its fair value? Now, here is a chart that shows the trend in the Bitcoin exchange whale ratio over the past year. As you can see in the above graph, the Bitcoin whale ratio has surged up to some high values over the past couple of days. The current values are at similar levels to those observed in early January, shortly following which the price crashed down hard. The quant has marked this trend in the chart.